Will the stock market continue to sell off tomorrow? We saw the Dow today make another new all-time intraday. And we look at how the indices fared across the board. The Dow was up 65 points. NASDAQ was down 152 points. S&P 500 was down 17.7 points. Russell 2000 up 0.4 points. Now we look at advancing issues versus declining. We had 52.4% of issues declining on the day. And we come over and look at the sectors across the board. Energy leading the way on the way up. The laggers out there was technology, consumer cyclicals. Now, speaking of energy, oil gains more than 3% on Libya output halt and escalation Middle East tensions. Now, we still don't know if the tit for tat is done between Israel, Iran, Hezbollah, Hamas. That could still weigh very heavily on the price of oil. And if we come over and take a look at crude oil today, we saw crude oil had a very bullish day where crude oil was up roughly 3% on the session. We got to ask ourselves, is this going to be part of an ABC pattern on the way up? That gives us a price projection just barely above this previous swing high, right up here, about 79.91. Then as we come over and look at the fear and greed index, we see we're sitting at 54, not able to push over into greedy territory. Now today we saw Fed's daily agrees with Powell view that it is time to cut rates. However, it's going to be very important later on because let's not forget, on Friday, we're going to see the core PCE price index, which is going to be the Fed's preferred measure of inflation. And if you guys were paying very close attention to when Jay Powell was speaking at Jackson Hole, one of the things that he's talking about is we are very concerned about unemployment. Well, on Thursday, we're going to get another round of weekly unemployment claims. So we most certainly want to keep an eye on that. Then tomorrow, in terms of economic news at 9 a.m., we have the S&P CS Composite 20 HPI year over year. Then at 10 a.m., we have consumer confidence, followed by the Richmond Manufacturing Index. Now, if you guys missed out on this morning's analysis video, I started streaming live at 9 a.m. in the morning going into the open. So if you guys want to make sure you don't miss tomorrow's volume profile levels, check out tomorrow's live stream at 9 a.m. Now, we also see right here, Fed's daily labor market is in complete balance. And this is where I need some help from you guys. Do you guys agree with this statement? Is the labor market in complete balance, or is it about to go to hell in a handbag very, very soon? Now, I want to share this stat with you. I meant to share this stat with you guys in Sunday's video. When we saw the S&P trailing was up 10%, notice how we actually perform this week, August 27th through September 9th. We're normally up 15 times, down 7. However, from September 9th through the 15th, we see a period of weakness, only up 9, down 13. And then also the last week of September, we need to be very, very cautious. That's also a period of time where we normally see a lot of weakness show up in the stock market. Then let's not forget this week, all right, no joke, it's going to be all about Wednesday. We have a lot of earnings coming out on Wednesday. Big dogs out there. NVIDIA, CrowdStrike, Salesforce, Affirm, just to name a few. And when we look at the expected movers out there, Affirm is expected to move plus or minus 16%. Five Below plus or minus 15%. NVIDIA plus or minus 12.5%. CrowdStrike plus or minus 11%. And this could cause a lot of volatility out here in the stock market. Now we come over and look at the dollar index today. Dollar index actually firming up a bit. Dollar index was up 21 cents on the session. Then we look at the precious metal gold. Gold is still trying to make its way up towards completing the ABC pattern up here at 2586.2. Now, when we look at the 10-year yield actually formed a hammer candle today. Are we going to see yields back on the rise once again? And if so, this could be problematic moving forward, something you most certainly want to pay very close attention to. If the yields start to spike, watch out. We're going to be in some deep, deep trouble. We take a look at NVIDIA today before earnings coming out. NVIDIA was down roughly 2.25%, which is really not surprising because we've seen a lot of technology stocks down. Microsoft down 0.79 points. We take a look at Google. Google actually formed a doji candle, was able to come back and was only up 50 cents on the session. We take a look at Apple. Apple was also able to come back and recover today. However, it was only up 34 cents on the session. We got to ask ourselves, is this recent rise up in this consolidation nothing more than cause being built for another move higher, or is this distribution and we're about to start to see the market coming back lower? If we look at the Dow basically formed a doji. It basically did a look above all-time highs and says, you know what? Air's a little bit thin up here. Let me go ahead and pull back here just a bit. Now, is this going to be part of a reversal pattern? We see the Dow now starting to work its way down, potentially filling some of the gaps down below us. Then as we look at the Russell 2000, the small caps actually down 26 cents on the session. However, it gapped up this morning, quickly came down, and notice where we came to, right near this high volume area at about 22.22. Then as we dive down and look at the Qs, the NASDAQ, you can see we actually broke below the low of that bearish engulfing candle. However, we were unable to hold down below those lower prices. And when we look, the MACD indicator is still extremely strong on the daily chart. When we move over to the 4-hour chart, we see we got a fresh cross of the MACD lines, and all eyes really need to be focused right over here about 461.69, the high volume area. And when we look left, right near a gap in the market. On the 1-hour chart, we're already now down below the zero line. And the way this pattern is playing out, we had an impulse move down. We popped up a little bit, and now we're just kind of wedging lower. And we got to see, do we get a fast break to the downside, or are we going to bounce? Now, I want to make you guys aware, time is running out to take advantage of Apex's 80% sale off all their evaluation accounts, $40 reset fees, passing as little as 1 day, and $85 activation fees across all accounts. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Looking at the volume profiles, however, in the 30-minute MACD, we see MACD indicator looks like it may want to firm up. Now, if I look at today's volume profile shape, it's going to be a B as in boy, which basically signifies if we start trading above value area high, we're likely to come up towards the upper third of the range, somewhere in the ballpark of 478.54. However, if we just do a look above value area high and we come down, we want to target the point of control, value area low, and then we want to look and see, can we come all the way back down towards those lows? Now, today during the live stream, we were talking about this ABC pattern potentially playing out. You can see the price target on that is going to be about 19,400. Then we've been talking also about this untested value area high right up here at 19,424.00. Are we going to finally come back and take out that level? Because we're not that far away. All right. We've violated the B point, which means the ABC pattern is validated. However, it does not guarantee we're going to get there, but it is looking very good at this moment. Then as we come out over and we look at the daily profiles, we never made it back to this minus development area that we were talking about on the live stream. So one thing we want to be cautious of is, do we spike this low where we've had this consolidation and then start to work our way back up? If we start to firm up, this minus development area is going to be a point of interest we want to focus on, anywhere from about 19,676 up here to about 19,693. Now, when we look at the volume profile, we can also see that value area high comes in at 19,653.00. The point of control will come in at 19,601.00. Value area low will come in at 19,518.50. So how do I want to handle this? Well, it's going to be very simple. We're dead smack in the middle of value, so I have no real edge at this moment. But if we can break below value area low and then we start coming back up, well, guess what? I then want to target the point of control. I then want to target value area high. Then I want to target this minus development area. Now, with the minus development area, one, it could act as a rejection point back down. And two, it's going to act as a magnet trying to attract price back up towards that level. If we clear the minus development area, then the next area I really want to focus on is going to be up here towards this candle wick, somewhere in the ballpark of about 19,745. Keep in mind though, if we break value area low, I want to focus on that ABC target and that untested value area high that we talked about on the 4-hour chart. And if we break above value area high and then we come back down, I want to target point of control, value area low, and then those targets that we talked about with the weekly profiles. Now, as we come over and look at the SPY, you can see we have a little bit of a buying tail on the bottom of this candle. We did not close at the lows of the session. We're down $1.34. Now, you can see we've gotten up into this candle of all-time highs, and essentially we have not filled the gap yet. We came very, very close. Now, we got to ask ourselves the question, is the market basically trying to entice all the longs to go ahead and step in, and the market's getting ready to rug pull them, and we're about to see the market coming down, at least in the short term, and filling some of these gaps and testing out some of the high volume areas on the composite profile. On the daily chart, MACD looks strong at this moment. On the 4-hour chart, you can see we're starting to kiss together on the MACD indicator. Then on the 1-hour chart, we still have a bearish separation of the lines. We are not below the zero line just yet. Then on the 30-minute chart, notice what we did today. We basically got above the high from Friday. And I said this morning during the live stream, if we get above that level and we come back down, we want to target value area high. We want to target the point of control. We want to target value area low, and anything below that, that's when the gap support and then the gap being filled then comes into play. Well, we didn't make it all the way down here. We got some of the targets, And as you look at this, look what we're doing, right? We moved down today, we came up. We moved down, we came back up. So here we are. We have a high, lower high, and we have a low and another lower low as well. So for context, we are in a minor downtrend on the 30-minute chart at this moment. Then as we come over and look at the 4-hour chart, notice what we have, right? We're unable to hold above this high volume area. Now, the next area I do want to focus on is going to be the high volume area right down here. But also, let's not forget, we have a huge minus development area over here on the weekly volume profile. Now, as we come over and look at the daily profiles, the chart looks a little bit messy. Here were some of the drawings that we drew out. Now, one of the areas we talked about coming back to get tested was this minus development area. It's not a minus development area no more. We came back and tested it. We talked about this on stream. What did the market do? Came right into it. Boom, rejected down. We actually drew this level out before I actually went to lunch today. Then we rejected and we came right back down. Now, as I'm looking at the profile, value area low will come in at 5628.00. The point of control will come in at a price point of 5636.00. Value area high will come in at 5650.50. So how do I want to handle? So it's going to be very simple. If we break value area low and we stay below it, I want to stay looking for lower prices. We zoom this out. Where might those prices be? Well, one of those prices would be right down here near this candle wick, somewhere around 5605. We talked about this earlier during the live stream. We have a large order resting there. Anything below that, then I want to target down here near the lows from Thursday. Then as we start breaking that level, then it really makes sense to try to see, can we go ahead, hold a runner, maybe all the way down towards this high volume area right down here, somewhere in the ballpark of about 55.31. Now, there are some other high volume areas that we can target along the way as well. The first one being 55.58.50. Now, if you want to learn a 3-step approach to trading trend continuation, make sure to watch this video right here.